Breaking news right now from Islamabad. After 21 hours of intense face-to-face negotiations, Vice President J.D. Vance has officially announced there is no deal with Iran. The high-stakes peace talks have collapsed, and the U.S. delegation is already on Air Force Two heading back to Washington. If you're an investor or just worried about the $5 gas prices, you need to watch this until the end. Today, we're breaking down why the talks failed, the impact on the stock market, and why oil prices are about to explode. Welcome back to NextGen Finance.
The negotiations in Pakistan were the first direct meetings between US and Iranian officials in years, but according to J.D. Vance, Iran refused to accept America's final and best offer. The sticking point, the U.S. demanded an affirmative commitment that Tehran would not seek nuclear weapons or the tools to build them. Iran, on the other hand, reportedly demanded full control over the Strait of Hormuz and an immediate halt to Israeli strikes in Lebanon. The result? Vance was clear: we have not reached an agreement, and it's bad news for Iran more than it is for us. This failure leaves the current ceasefire on very thin ice.
This is where it hits your wallet, America. The Strait of Hormuz crisis. Nearly 20% of the world's oil passes through this strait. Iran has refused to relinquish control, and with talks failing, the threat of a full blockade is back. Price predictions. Brent crude was hovering around $95, but analysts now warn it could surge past $120 or even $150 per barrel by the end of this month. At the pump, if you think gas is expensive now, buckle up. We are looking at a real possibility of $5 to $6 gas across the U.S. if the energy supply chain remains choked. This is a massive hit to U.S. consumer sentiment, which has already slumped 10% this month. Tomorrow morning, when the opening bell rings on Wall Street, expect volatility. The fear factor, the S&P 500 and Dow Jones have already been struggling. With no peace deal, uncertainty is the word of the day. Safe havens. We expect to see a massive shift into gold in the U.S. dollar. When the world gets shaky, investors run to safety. Defense stocks. Watch companies like Lockheed Martin and Raytheon. With the war cost already exceeding $200 billion, the defense sector is one of the few areas seeing growth. Politically, this is a huge moment for the Trump administration. Dispatching J.D. Vance showed how serious they were about a deal. Trump's stance? He recently said it makes no difference if a deal is reached, because in his words, America wins anyway. But for the average American, the win is harder to see when inflation expectations for next year have jumped to 4.8%. The Federal Reserve is now highly unlikely to cut interest rates anytime soon. The no deal in Islamabad isn't just a diplomatic failure, it's a financial shift. We are entering a period of high oil, high inflation, and high market volatility. What do you think? Should the U.S. have been more flexible, or did Vance do the right thing by walking away? Let me know in the comments, especially if you're seeing gas prices jump in your city today. Don't forget to like and subscribe to NextGen Finance for the fastest updates on the U.S. economy. I'm your host, and I'll see you in the next one.